All right, everyone, welcome back. It is now just after 3 p.m. Eastern Time. This is my weekly analysis stream. If you don't know how it works, here's how it goes. So, first thing what I do is I run through the economic calendar very quickly, and then from there, we look at some charts. Okay, so today, of course, I'm going to examine Bitcoin. We're going to update the analysis that I published yesterday on TradingView. Hopefully, you read that. And then from there, we're going to look for re-entry signals on the Trade Scanner Pro to see if there's anything going on. Now, if you don't know what a re-entry signal is, you should watch my stream earlier because I formally introduced the concept in my earlier stream. Hey, Alex from Romania, how are you? Good to see you. If you want to share what city, what country you're from, it's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. So, welcome everyone, and let's first talk about the economic calendar very quickly. I know I should have it on my screen here, but there wasn't really a whole lot this week. All right. Uh, Earlier in my stream, Hussein mentioned that Chairman Powell was speaking today, but when I checked my calendar, he wasn't on there. So I don't know. I know President Lagarde spoke, but I don't know. I saw nothing about Powell. So I'm not sure what that was. Also, this week, now it's the first week of the new month. So, what that means is the main reports that we're going to have that are worth mentioning are the ADP employment report, which is Wednesday. That I believe that's an 8:30 a.m. report. It could be 10 a.m. Double check the numbers, the time stamps, because I always get confused with that one. And of course, Friday is non-farm payrolls. That's probably next to an FOMC meeting. That's the most important scheduled economic event each month. That's at 8:30 a.m. Eastern time. So going into trades like the day before, it's usually not a great idea to take overnights or larger positions going into such a number. Volume tends to dry up, and that's because of the uncertainty that surrounds the number. Of course, the market has its own baked in expectations, but the outcome tends to be very random. And there are strategies, there are ways to trade that, but typically you don't want to have positions going into it. All right. So, oh, cool. Thanks for mentioning that, Alex. We can take a look at that as well as we go through the analysis here. So that's pretty much all that's worth mentioning. There were other items on the economic calendar, but I saw things for I saw President Lagarde was speaking again during the week for the ECB and stuff like that. But unless you trade forex pairs, specific forex pairs like euro or whatever forex, whatever country is reporting, whatever. Usually, it doesn't really affect the dollar. And right now, we're most interested in the dollar. It's still the world reserve currency, and if the dollar moves big, everything moves. So we want to pay close attention to that, especially in this environment where volume is getting less and less. And we're going to experience that. This is now the beginning of June. So it's going to get worse. It's not going to get better. It's going to get worse. And the bottom of the volume is usually the third or fourth week of August. That's just the cycle. That's the season. So it doesn't mean we won't get market movements. But what it does mean is that larger market movements are going to be more sporadic. They're going to be particularly event-based, meaning there has to be a specific catalyst rather than just having a day where the market flows nicely one way or the other. I mean, those days are still possible, but what I'm saying is they're less likely, right? And we're more likely to be stuck in these low volume, these slow moving environments. Just like over the previous week with the Trade Scanner Pro, I mean, every day I was losing money. Okay, three sessions, I gave back $1,000. Today, my first trade was a stop out, but then I came out, I made that money back, and I finished up break even basically, right, up a little bit. But that's the type of environment that we're in. Now, I introduced one specific adjustment for the Trade Scanner Pro earlier today during my stream, which is the reentry method. I've talked about it before, but I basically formally introduced it as a filter for how I'm using the Trade Scanner Pro in this environment, right? So, and that is very applicable to larger time frames, like anything above a 1 minute, 5 minute, 15 minute, whatever you trade. It's very applicable. The larger the time frame, the more applicable it is. So I'll review that. I'll review that again here. Hey, Hussein, good to see you again. See, Hussein is here for round two. All right, so let's take a look here. Oh man, Hussein, you need to bring some of your friends. Eh, these numbers are worse than my streaming my AM session, which is usually worse. This session usually gets a little more. Man, this session is worse. All right, I'm not. I have done my rants today on my bad numbers. I'm not going to repeat them. So anyway, if you want to see my rants on my bad numbers, you can watch my first stream. All right. So all right. Hey, Mohammed. All right. Good to see you all. Now let's talk about Bitcoin first. Now, Alex over here mentioned AMD. So we could take a I'll take a moment. We'll take a look at AMD, especially the trade scanner bot called it. So we can take a look at that. The trade scanner bot, by the way, is a great tool if you use it properly. Yes, it calls a lot of bad trades too, but you have to know what to look for, right? Anyway, yes, okay. So we'll start with Bitcoin here. Now, what I'm going to do is I'm going to make this chart bigger. And the first thing I'm going to do is I'm going to review my analysis from yesterday. Again, if you have a symbol or something you'd like to see, just share it in the chat, because that's what the purpose of this session is, right? I'm doing analysis. We're going to take a look at Bitcoin. We're going to take a look at the NASDAQ. We'll take a look at the bonds. If there's something you guys want to see, so I'll take a look at AMD. If there's maybe a stock or something you want to see, let me know. An altcoin, we can take a quick look at it. And then what we'll do is we'll turn the Trade Scanner Pro on and see if there are any re-entry opportunities that are worth getting involved in on larger time frames. So I guess you can call this like the swing trade portion of the Trade Scanner Pro. All right. Now let's talk about Bitcoin. So yesterday, if you read my analysis, sure, Hussein. Cardano, yeah, no problem. All right. So we're going back a bit, going back a couple of weeks, right? And I've talked about this. I've pointed this out numerous times. In my analysis from a couple of weeks ago, I was pointing out the wave 5 situation, right? So whenever you count 5 waves, even if it's on smaller magnitudes, what that means is the potential becomes limited, and you're more likely to see a corrective structure unfold next. The typical investor or trader doesn't pay attention to this, right? They're all too busy thinking that they're going to get rich and they're going to be bazillionaires and they're all buying their Ferraris over here, right? And then you have all the fake gurus coming out and making that even more, they encourage that feeling even more. That's usually a top of a wave 5. If you can count 5 waves, then you should be looking at it as risk is getting greater. Risk is not getting less, it's getting more. Do you want to take more risk as along? It's usually not a good idea. And now we have a corrective move. Another thing I want to point out is over here, these candles, this was the Bitcoin conference that we had over the previous week or whatever, the fabulous and the glamorous Bitcoin conference where they had 10 bazillion glamorous speakers, all the experts, and they're all sitting there blowing smoke up, what, telling each other how rich they're going to be and blah, 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 blah. Well, nice job. Nice job, Bitcoin conference, because since that stupid conference, this thing is making lower highs, right? So what happened to the grand future of this thing is going to be at 10 trillion by next month? What happened to that, Michael Saylor? So anyway, no, I'm just being, I'm being sarcastic. Sure, look, the bigger picture is bullshit. I'm not a Bitcoin bear, but I do have a problem when they paint these pictures that look like everyone is going to be a trillionaire, but they don't talk about the risk. That's the problem that I have, because there's always risk. And that's what I focus on, risk. And no one likes to hear it. And, when I'm wrong, they love to point, if I listen to you, I'd be poor. Well, hopefully you listen to me this time. And hopefully you weren't buying the top. Okay? Risk. That's what I focus on. When we were at 76K, and you guys know, especially my regulars, you guys know, I was pointing this out here. And I was calling this a long. You guys remember? You could go, and if you don't, you could go check my trading view analysis from that time, see the articles I was writing. You can watch my videos from that time. I was calling it a long 76K up to 80K, even 85K, right? That's where risk was low based on the wave count. Now, risk is high because based on the wave count. If you don't know how to do wave counts, learn wave counts. Google it. There's 10 trillion videos on wave counts and books and all kinds of stuff. So anyway, all right, enough ranting. I talked about the bull flag situation. I'm sorry, the bear flag situation. That was the point of my analysis yesterday. So I drew on my chart, I drew here the bear flag, which was these little parallel lines. And then I drew my illustration. I pointed out the bear flag. That's why I have an arrow there. And then I drew this illustration, basically saying this is the move I'm anticipating this week based on that. So this is all really just levels and trend. That's really all it is. Now, what I was saying about the bear flag is the bear flag would have been invalid or not valid if it broke above the 106s. We never broke that high, right? So this often catches a lot of newer traders, right? They think that, or investors, they think, oh, I'm buying the bounce. But you're buying into a resistance, right? This 105K, this line that I have on the chart, this line, that's a resistance. I should have pointed that out more specifically, but that's a resistance. Okay. It was a support, right? Whatever. It became a resistance. It broke, it became a resistance. This bear flag drove right into it. It probed right into it. And this area right here, if you're a day trader or a swing trader, whatever, this area right here, that's where you should be watching on your smaller time frames for any kind of bearish signs. So the daily time frame is now in play, right? This candle has to close. Once the candle closes, the break of today's low would constitute a sell signal on this time frame. Of course, if you're watching a 4-hour chart, you're probably going to see something sooner. Let's switch to a 4-hour chart. What was available on the 4-hour chart? Let's take a quick look. I mean, so price pushed up into the resistance. This is not an engulfing candle, but it's almost engulfing, right? Then you have an inside bar right here. So the thing is, you had this bearish rejection off the resistance, followed by an inside bar. Then you have the bearish engulfing candle, right? So when you see that, now of course the candle has to close, it takes 4 hours, but when you see the tail, even as the candle is developing, and you see this tail, and then the candle breaks the inside bar low, that's a pretty decent sign that the bear flag is in play, okay? So that's how you use this information. I don't make specific forecasts on my trading view. I just basically talk about scenarios, and then I highlight one that I think is most probable, which is this illustration here. So I was looking for the pullback, and I keep talking about this level, the 102 to 100K area. All right, we basically bounced off of the 103s. So let me just highlight it. Here's 100 to 102. That's the range right there. That's what I'm anticipating. All right. So if you're looking for longs, that would be a good place. So let's see what you say here. How much chances BTC go to 100K? Okay. So I can't put a specific probability. I don't know what the chances are specifically. But what I can say is because we have this formation right here, and we close like this, remember, the market has to confirm. So the confirmation would be we close, we break below the low. The low is 103,685. You can round that to 103,500, right? Nice whole number. That means if price breaks below 103,500, there is a greater, I believe, a greater than 50% chance that we touch the 102 to 100K support, right? Over the next few days, if that momentum can continue and follow through. So that next candle, if we get the break of that low, should look like that. And it should close red. And it should close near the low of the candle, right? It shouldn't be a bullish pin bar. If it's a bullish pin bar, then that changes everything. Because if the market is truly going to be weak, at least for this segment, then we should see a bearish close. It should close near the low of the candle. If we're getting a pin bar close or something like that, that's telling us that people are stepping in earlier. And if that's the case, you want to eye the high of that candle. If the high of that candle is compromised, then you may get the bounce sooner. In that type of situation, again, it's all about adjusting. In that type of situation, that would qualify as like a failed low in this area right there, right? Where price goes slightly lower, but it can't get into the 102s because buyers step in early. You get a failed low. Something like that would be very clear on a 4 hour or a 1 hour time frame. That's why you use the daily as like a general guide, but then you look for your confirmations on smaller time frames. That's especially helpful when you use the Trade Scanner Pro because then it actually quantifies the risk. And the smaller the time frame, the lower the risk is going to be, relatively speaking, because it's measuring the candles on those time frames, right? And naturally, they're going to be smaller. So, does that make sense? Um, it cannot understand context. It probably thinks more about large trend. What do you mean? Oh, what do you mean, Alex? I'm not sure what you mean by that. What do you mean by this question? It cannot understand context. If you're talking about the Trade Scanner Pro, yeah, the Trade Scanner Pro cannot understand context. It's only measuring momentum. That's what it's actually measuring. And then when momentum changes a certain way, then it generates a signal. Now the signals can be random. It's very easy for them to be random. That's why I tell people you do analysis first. Your first step is the analysis. Then the Trade Scanner Pro helps to confirm it, and then it gives you quantified risk and it gives you a price objective based on the recent price action. That's what it does. So it helps to simplify your decision making. That is the purpose of the Trade Scanner Pro. Now, I realize a lot of beginners out there, they don't know any better, and they're looking for a tool that's going to do the forecasting for them. There is no such thing. And if there is, they're not going to sell it on TradingView. Okay? Just to let you know. So, oh, okay. Let me look back. Alex. Are you talking about here? Okay, let me just go back. Um, I don't see. I'm not sure what you mean, Alex. Previous comment. Which one? I tagged Twitter. Was he saying I tagged Twitter's AI on your bear flag? Oh, to give an opinion. I tagged Twitter's AI. Okay. Oh, the Twitter AI. Okay. Oh, oh, and it gave an opinion. Oh, okay. Was it a was it agreeing with me or no? That's interesting. So, well, thanks for doing that. So you guys clear? You understand where I'm going with this Bitcoin situation? So understand, short term, yes, I'm looking for this thing to pull back, but bigger picture, this market has a long way to go before we can say it's actually bearish, right? So I know I sound sarcastic when I talk about like the Bitcoin conference and stuff. And again, it's because these people are like in another world and they don't talk about risk. Like they should be emphasizing risk. But of course, risk is not sexy. And if their headline on the show was, hey, we're going to talk about risk, no one would probably show up. Right. So that's why no one shows up to my streams, by the way, because I talk about risk. Oh, so after the 100K comment, hey, how are you? Sure, I can look at silver. All right, so I'm kind of missing. I'm missing what you're saying there, Alex, because I don't see your comments on here. So if they're on Twitter, I don't have Twitter in front of me right now. Okay. Oh, okay, no problem. You should watch the stream when you can, because I talked about a new technique. Well, not actually, it's not a new technique. I've talked about it before, but I sort of formalized it as a filter that I was using in my stream today to kind of keep me out of trouble. The reentry technique, which I'll talk about that here again as well, because it's very relative to larger time frames. It's more relative to larger time frames, actually. Okay, so yeah, but so I have AMD on the list, I have ADA, and I have silver. Okay, so we'll take a look at those. So the Twitter AI doesn't agree with me. Well, I don't expect it to. I started it, but I had okay, no problem, no problem. Yeah. Anyway, so you guys understand where I'm going with this? The exercise here is to learn how to use my analysis on TradingView because I know I leave a lot of specifics out. I can't put everything in that article, but I try to give some general guidelines so that you have some sort of general expectation. But remember, the market has to confirm. If the market doesn't confirm, it doesn't matter what I write. I could write Bitcoin is going to 1 million. It doesn't matter, right? The market has to confirm. If the market does not confirm, then it changes everything and you have to adjust. That's how this game works. I know a lot of people, they don't like that. They want precision. They want you to know the future, and they're just they're just wasting their time because that's not how markets work. And until they realize that, they'll have to find out the hard way. All right? I'm skeptical. This is what AI said. This is what Twitter said. Let's see. It's skeptical of my idea. Let me see. Is this the one over here? So this is what Twitter AI said. Bitcoin's price around 104, but no clear bear flag pattern. Well, that's what happens when you get a robot, because it's looking for a precise bear flag. A bear flag is simply two parallel lines. Okay? It's two parallel lines that are going the opposite way of the general momentum. This was the general momentum, right? So the AI can't see that. It's not going to understand how to process that. Remember, AI is just looking at language models, and it can't see things like a trader. It can't. It does some pretty impressive things, I have to say, when it interprets a chart. But I think what it does also is it looks at like a general consensus and just repeats it, right? That's why you can't trade on that nonsense. But interesting. That's very interesting. Thank you for sharing that, Alex. And Alex says, with strong support levels at 90K, while some bearish views exist, the majority, consider both perspectives and monitor price action. Great. Well, I'll tell you one good thing it says there. The majority conflict with my outlook. That's a good sign. That's actually a very good sign. You don't want the majority to agree, because if the majority agrees, that means you're most likely wrong, right? When the crowd reaches some type of consensus in the markets, it usually means the move is over, right? And these AI bots, AI is just as bad. It's just basically a robot retail trader, right? And it's just looking at all the retail trader consensus, whatever, and it's agreeing with it. So anyway, Twitter bot, we'll have to see who's right about this one. But it's talking 90K. Come on, man. I'm not even talking about 90K. I'm talking about just test of 100K. Like, what it's saying there is actually it's conflicting itself. It's saying, oh, I don't agree with Mark, but it could go to 90K. Great. Thanks, man. Great analysis. Thanks for your help. Uh, yeah. So that's a very interesting thing. Alex, thank you for sharing that. That's very interesting. So you guys clear on that? So use my analysis as a guide, just like I use the wave counts. I can't trade on the wave counts, but it's a very valuable guide. When I see wave fives, you see the first thing I start writing, party's over, potential's limited, risk is elevated. I say the same thing every time, right? And look what we got since then. We got a three-legged corrective pattern. So if you were following that, if anything, you knew as a guide not to be going long up here, or maybe reducing positions, taking some profit off the table. You have to put what type of position you have into perspective as well. If you're an investor, you're not going to treat that the same way as you would as a trader. Being an investor and being a trader, while they have similar characteristics, they're not the same thing. So you have to understand, and the contrast is with the risk. Investors naturally take greater risk because you're in the markets longer. Traders take less risk, just more frequently, right? So that's why traders tend to lose money more than investors, because investors just stay in. And when the market has these big moves, investors enjoy all of this, while traders are trying to get in and out of it. And traders don't make as much money in moves like this, right? Investors do, because they just buy and hold, and they just mindlessly watch it, and it's like watching porn. You know what I mean? That's what they get excited, And then when it does stuff like this, they're like, oh, they start justifying, it'll come back. It's just a little pullback, right? It's a little pullback until it goes to 65K, and they're all getting banged out. Anyway, all right. So I'm ranting now. Are you guys clear on this before I start jumping charts here? Before I start changing charts. So just to sum this up real quick, we have the bearish confirmation, right? Meaning this structure is still in play. We have this corrective structure. It's still in play. That does not qualify as a bearish trend on this time frame. It's just a corrective structure within a broader bullish trend. The broader trend is still bullish. It's going to take a while for it to turn bearish, but that does not mean you have to avoid taking shorts on small time frames, which is the ideal place to do it if you're going to do it. 15-minute charts, 30-minute charts, 1-hour charts. You could grab a few thousand points or something like that in such a move, right? What's wrong with that? So that's more of a swing trade mindset. As an investor, it's simply too early to do anything. If you're in, you just hold on, right? Because or take something off the table. It all depends on where you're in from. If you bought somewhere above 100K, you're just kind of, I don't know what to tell you. You've took the most risk and you let someone out and made them rich. That's all I can tell you. These are generally high risk prices for an investor. Low risk prices would be 95K, 90K. Those would be lower risk prices at this point, right? If you're thinking about putting on more, looking to add to your investment, those would be lower risk places to do it, not these prices. So that's all I have to say about that. All right. Yeah, 65K. So anyway, with the relative weakness, okay, okay, what are some of the, you see with shorts given, well, all right, we'll have to take a look at that. All right, I have to see what that chart looks like. But most of the altcoins, by the way, have been acting relatively weak to Bitcoin. As Bitcoin is pushing new highs, many of these altcoins are still nowhere near their highs. Now, I know there's a lot of frauds out there and a lot of clowns saying, oh, altcoin season, altcoin season. Bitcoin dominance is going to go lower and we're going to have altcoin season again. Buy these coins, buy 10 coins, and you're going to be you're going to be a trillionaire. I see those on YouTube. I you want to follow that stuff? I don't know what to tell you. But, I'm not a big believer in that Bitcoin dominance thing, at least not for analyzing Bitcoin. Maybe it helps with the altcoins because obviously it just shows money flowing into altcoins relative to Bitcoin, whatever. But we'll have to take a look, right? I'm a believer that Bitcoin is the leader. If Bitcoin rallies, they should rally. If Bitcoin doesn't rally, or if Bitcoin rallies and they don't, that's relative weakness. That means no one's buying them. That means when Bitcoin sells off, they're more likely to sell off faster. That's the idea of relative strength or relative weakness. And that idea comes from the S&P and stocks. That's one of the first concepts I learned as a trader. So anyway, all right, so that's Bitcoin. I'm going to leave. If you have questions about my Bitcoin analysis or my forecast or what I'm thinking here, please ask me in the chat. I'll be happy to address the question. All right, so let's move along here. We'll start with AMD because Alex from Romania asked for AMD. Let's take a look. So I know the Trade Scanner Pro had called AMD as a long. The bot called it as a long. Let's see what it says here. So is this right? Okay, yeah. Let's take a look. Now, here's what I'll do. In fact, let's put on this chart. Let's put, I guess we could put the SPX, right? SPX, the S&P 500. This is the index, okay? This is the index which you can trade options on. This is not the CFD. This is not the SPY. Although the charts are going to look very similar, this is the index. It's the big one, right? The big contract. Now, I'm going to put that here. And on this chart, we can take these moving averages off. We're not going to need those. On this chart, what I will do is we'll put AMD just so we have some sort of comparison, right? And it looks, I see a signal on there. So let's take a look about, let's see what all this means. So first of all, just strength-wise, the S&P on the daily time frame here, that's the daily time frame behind me. This has been generally bullish, right? We have a higher low over here, right? A higher low over here. And it looks like it's consolidating right here. This looks like it's poised to go higher. Funny, funny how, again, I have to point this out. All the renowned economists and all the experts and all the haters and all that other nonsense, right? Remember what they were saying here? Why wasn't anyone calling for this? Why? I made a video during this week. Okay, I think it was right here. Let me see. I made a video. I streamed. It was like a Thursday night. I think it was here or it was here. It was one of these candles. And I said, "How I'm buying the bottom of the NASDAQ." That was the title of the video. It's still on there. Okay, it's still on my channel. Right? So, how come no one was calling for this? Why? Why is that? Why? So anyway, that's why you can't go by the garbage that you consume in the general news. You can't go by that. They're incentivized to simply get attention. They don't care if they're right or wrong. They're not trying to be right or wrong. They just want to put something out there that will get your attention. So they'll just tell you what you want to hear or whatever. Oh, the market's going to zero. And then everyone's going to watch those stupid videos, right? And then they make money off of the ads and whatever, and you make nothing. So stop paying attention to that stuff. It's not going to help you. Maybe you sound cool in front of your friends, but that's about it, right? Because no one was calling for this. Anyway, so we're consolidating right now. This looks like it wants to break higher. That's important information because if I can anticipate higher prices on the S&P, then that's going to be important for my stock picks if I'm working with stocks, right? And this is going to be relative to AMD here in a moment because AMD is one of the like mainstream names, right? I think it's in the S&P 500. I'm not sure, but it's definitely part of the NASDAQ, right? It's a tech stock. It's one of the leaders. So I'm pointing this out here, this consolidation, because this is an area where we can see some resistance, right? These type of consolidations, especially the midpoint of it, right? So watch for that area. What price is that? 6024. So 6,060, 6024, 6025, right? So 60 and a quarter. Watch that price area. Watch that price point because we're likely to see some resistance there, which means if you're buying something and price happens to be at that point, you're probably taking a lot of risk. Okay. Yeah. Now price may go higher, but price may also find a top in this area. The area I'd be anticipating, if there's going to be a top, I'd be anticipating it up in this area right here, right up in here, up there, which goes as high as what 62.44, something like that. That's a failed high area. So if there's going to be a top or something like that, that's probably where your risk is the greatest. Now, why is that important? You're like, I don't trade the S&P. Who cares? Well, that's important if you trade stocks. You need to know that because the NASDAQ, all of them, the Dow, the NASDAQ, the Russell, they're all going to be the same. They all follow this thing. This is the S&P, right? All right. Now, with that being said, let's take a look at AMD, right? Now, so this AMD situation, first of all, there's a signal on this time frame. What time frame is this? This is the daily chart, right? This is a short signal on this time frame. Does that make sense to us? Are we looking for short signals? Let's see if someone give me an answer. Alex, what do you think? Are we looking for short signals? Like, is that part of our, is that generally what we're looking for here? Yes or no? What do you think? Real quick. Because this thing is giving us a short signal. I know Alex probably knows the answer, but for those of you who don't understand the Trade Scanner Pro, you may be thinking, oh, okay, it's a short signal, right? Alex, you want to chime in on that? Or while we're waiting for Alex, I'm going to answer the question. We don't pay attention to the short signal because we have not done analysis yet, right? So this signal is meaningless. It could be random. So the point is, don't let that confuse you. If you find that confusing, this is what you do. You go up here, right? And you turn it off. That's what you do if you find it confusing because it doesn't mean anything. The Trade Scanner Pro, just like the Twitter AI, can't see certain things. It can't see. It can't see exactly what we see. So we do our analysis first. And this is especially important on the smaller time frames like I do each day or every other day when I examine my 30-second and my 1-minute charts. It's the same concept. Now, so AMD, right? Looks similar to the S&P, does it not? Right? We had this situation here. Look, AMD, situation here. Look, AMD, higher low. S&P, higher low. That's not a coincidence. They follow, as AMD follows the S&P, right? Now, we have the same type of consolidating situation. Not only that, but do you guys see the wave count? I see a wave count. Okay, 1, 2, 3. This is wave 4. I can count 4 waves. This is wave 4. What does that mean? That means the next leg is wave 5. Most likely, there's a high probability of one more leg higher. That's how you use wave counts. You're either looking for 4 waves or you're looking for 5 waves. If I can count 4 waves, then I'm expecting a wave 5. It's a high probability. Okay? And it's very usually wave 5 a lot of times is symmetrical to wave 1, meaning like they're the same like length. So it could be something like that, right? Which means, you're looking at 140, possibly 140 on something like AMD. If that's the case, right, that also implies more strength in the S&P. Okay? So, and you can say, well, what about all this other bearish stuff behind it? Okay, yeah, bearish stuff, but it doesn't matter if I can count 4 bullish waves. We're still likely to see one more wave higher. And then if this broader bearish trend wants to reassert itself, then maybe at that point, because after 5 waves are complete, then a corrective structure is likely to follow. So in this situation right now, the bearish corrective structure, which would be relative to the bigger picture, is not likely to follow yet. There's one more bullish leg. So not great for investors, but great for swing traders and day traders. That's really who can capitalize on this. Investor, I wouldn't touch this thing. I wouldn't touch it. Just like the S&P right now and the NASDAQ. I had my NASDAQ position. I got out of it too early. I'm not going near it at these prices, right? As a day trader, sure, but not a bigger picture. No way. No effing way am I touching it at these prices, right? We have to see a pullback of some kind. There's no pullbacks, right? No real pullbacks. Anyway, so and those type of trades, right? Those broader cycle trades, they're not frequent. You may get a couple of those a year, maybe 3, maybe 1 per quarter. I don't see one yet. All right. Following me so far? I don't see anything in the chat. You guys still there? My chat working over here? Let me see. Think so. All right. So AMD, right? This looks like a long to me. Now, Alex was saying earlier that the trade scanner bot called a long, but this is a short. Well, remember, this is the daily time frame. Let's take a look at the 4-hour time frame. Now, he said there was a long over here. I don't see it. All right. I don't see the long here. Maybe it's on the hourly. Let's take a look. It's not here either. Is this thing set up right? Let's see. Yeah, it's set up right. Got everything there. Okay, I saw the email myself, so I don't know where I don't know where the signal is, but the bot called it. Maybe sometimes what happens is that the Trade Scanner Pro and the bot are not following the exact data feed, so that's probably why that happens. I know when we were testing that, Stain mentioned that a number of times that you can have that kind of situation, but this this is clearly, if the signal was called here, does the question is, does that make sense? Does that signal make sense? Absolutely. Right? I just counted a bullish impulse wave count. There's a bullish impulse wave count here, right? This is wave 3. This is wave 4. You guys see that? So the Trade Scanner Pro calls a long signal in the middle of a wave 4 or near a wave 4 bottom, whatever, or it's a higher low. I would agree with that signal. That's a good signal. I don't know why it's not on this chart. All right, it's probably the data feed. Am I still streaming here? I don't see anyone in the chat. Can someone say hello? All right, so that's AMD, Alex. That's AMD. So I would be anticipating a breakout of this consolidation. Of course, the S&P should cooperate with you. If the S&P sells off, this is probably not going to go very far. All right, so it's all dependent on that. But this looks good. This definitely looks good. Okay, cool. Thanks, eh? I mean, I can draw lines too. I can draw lines, right? I mean, it's simple. It's simply a consolidation. It's a higher low consolidation. We can analyze this in numerous ways, and it's all going to point bullish. There's nothing bearish about this. Does that make sense? So you can buy the stock. You can sell you can do a bull put spread on something like this, right? Where you sell a put. What is this low over here? Like you could sell like a 110 put and you buy like a 108 or a 105 maybe a few weeks out or something. Actually, not. You don't have to go like 1 week out because you want time. You want less time value. So chances are, it wastes time and you keep the money. That's the whole point of selling premium when you're doing short spreads. But something like that would be one possibility. You could do a call spread like just a vertical spread with calls, but then you need this thing to move your way. Whereas when you sell premium, it doesn't have to, like the market, if the market wastes time, you make money. That's the whole point of selling premium. Anyway, I'm not here to talk about options, but that's like one way, that's one consideration. That's the first thing I would think of is options. Okay. The only problem with those vertical spreads is assignment risk with the short premium ones, right? If it goes against you a little bit and it's in between your prices, you can get assigned, and I don't like that. I don't like that idea. That's why when I do those type of spreads, I do them in the SPX because in the SPX there is no assignment risk because there's no underlying to be assigned. It's just they just give you whatever. If you lose money, they just take the money out of your account. If you make money, they just put the money in your account. It's very simple. I like that. Anyway, all right. So that's AMD. Let's move along here. I had some other questions. Right, Cardano. Let's take a look at Cardano. All right, ADA USD. All right. Let's take a look at Cardano. Now, with Cardano, I'm not going to look at the S&P. We'll compare it to Bitcoin. So BTC USD, okay? And let's take a look. Let's see what we can see here. So this is Cardano. This is the 4-hour chart. Let's move this over to a daily time frame, right? Want to see. Usually with these altcoins, it's often a good idea to even look at the weekly time frame because you really get to see the bigger picture. This is usually, I find for these things, it's usually more relevant. Excuse me, because their day-to-day movements are usually a lot of times they're insignificant. So levels and trend are usually clearer on the larger, like the weekly time frame. Okay, so as you can see here, now let me see what he had a specific question on Cardano. Let's see, or he just wanted to see it. And then okay, hey, I see you have silver over here. If I skip your question or whatever, just repeat it in the chat because sometimes I don't see it when I look back, and then I forget to review it. Right. So if I skip, like I see silver, and then you wanted the other one. If I forget, just please remind me. All right. So Cardano. So I'm going to zoom out here a bit, and I'm looking to see like the relative, like the relationship here. So Bitcoin, right? We had that rally off the 76K low, and let's see around that was what? That was like in April. So this is around the same time here. So Bitcoin rallies like this, and Cardano rallies like that. Okay, it stinks. First of all, um, now usually these altcoins they depend on very specific news a lot of times. That's really what gets them going. Besides Bitcoin, was this back in November over here? Let's see. Yeah, this was the election rally over here where all altcoins went berserk, right? That's what that is. So, I mean, that's the type of catalyst that was required to get that going. Besides that, I mean, Bitcoin made a new high. This thing made a lower high. Not a good sign. That's generally relative weakness, right? Relative weakness. Now, in your favor, though, this general structure, right? You have this improving structure. It's trying to find strength. This is a consolidation. It's a really ugly looking wave 4, basically. Is that a wave 4? Let's see. If this is a 1, 2, if this is a 1, they overlap. So this is not really an impulse. This is not, if wave 1 and wave 4 overlap, it's not, it's just a compound. What this is just a compound consolidation. There's really nothing going on here, in other words. So if you're long Cardano, I don't know what to tell you. I mean, it's right now you have a support right here, okay, in this area right here. In fact, That support kind of. Can I get a line over here, please? Okay, there we go. So this is the situation you have, right? That's the level, and you're fooling around there right now. You have a lower high in front of you, so that's not exactly good. Like basically, that's not a place to add. If you're in as an investor, there's really nothing you can do here, but just watch, right? I mean, you have if this price area right here, what is this? 54 cents. Is that right? 50? Yeah. So you can round that to 50 cents. If 50 cents can hold, right now you're at 67.25. This thing can pull back to 50 cents. If 50 cents holds, that might be a good place to add as an investor. You can't really trade this thing. So I really can't talk about this from a trader perspective. It's not even worth swing trades. Really, it's not. You might as well just trade Ethereum or something, right? But as an investor, you want to look at the bigger picture levels. The levels are going to be very important, even more important than the structures, right? Because the levels can give you some opportunities to add or do something while the structure may not really be relevant. Like in this case, the price structure is not that relevant. And if we zoom out, like if I make this chart bigger, we zoom out, like I mean, relatively speaking, Cardano stinks, right? You really need to get beyond these levels here, right, to really get this thing going. But it doesn't mean that there may not be some. It doesn't mean that there won't be buying opportunities at some of these lower levels. So I'd be watching that 50 cent level right there, right, for a possible add or something. Or if you're not in it, that may be a good place to start a position. But just keep in mind, while this structure is not exactly like I wouldn't call this a bearish trend, it is not exactly a sign of strength either. It's mixed because it could be just a higher low developing from this initial move from back in November, right? But if it breaks below that low, if it breaks below 50 cents, then the best thing to do, in my opinion, like let's say you buy it at 50 cents and it goes to 40 cents or 35 cents. Best thing to do in that situation is just don't add any more and wait until it finds some sort of stability, and then perhaps add when you start to see some more stability, meaning it starts breaking resistances. Right now, this thing's not breaking resistances, and that's your first resistance right there, 86 cents. So you need to get above that. You can round that like to 85. You could round that to 90 or something like that, but you need to get beyond that to really start saying that this thing has positive momentum again. Does that make sense? Okay. And relative to Bitcoin here, it sucks. So what happens if Bitcoin pulls back to 80K? Is this thing going to get hammered? Now I find too, like with this relative strength, relative weakness, a lot of times, Bitcoin makes moves and the altcoins don't really respond at all either way. So it just means they're out of play. And you have to wait until the next altcoin season. But I'm a believer that altcoin season, oh yeah, 78 cents. Okay. So in this situation, my suggestion would be just hold off, right? No reason to add right now, put on more risk. If you're going to put on more risk, at least wait for a more opportune level. You're not going to miss out and if it rallies from here, you still have some, so you're not going to miss out. But I would wait for a more opportune level if you're interested in putting on more. If it breaks that 50 cent area, I don't know what to tell you. Like reduce risk or just sit on what you have if you can take the pain and just wait for the structure to improve, because this structure is not great. It's not horrendous either, but it's not great, right? So great would be you start breaking above that resistance. That's the first thing you want to see. And also, that would be also a good place maybe if you want to add in that type of situation on that type of breakout. That may be a good place to add because now you're putting on more with the momentum rather than dollar cost averaging against it, right? Okay, so that's Cardano. Hope that answers your question there. Can you analyze the others chart? Yeah, we can take a look at that. Let me see how am I doing with time. Yeah, I got some time. Well, so first, let's do this. Let's jump over to the bond market. Well, actually, yeah, let's jump over to the bond market real quick because we should always be aware of the bond market. Okay, the 10-year note. What's happening over here? What's this message on the bottom of my chart? We are in the process of switching the contract. Okay. All right. Okay. I don't need to know that, but thanks. So This is the 10-year note. There's a signal on the chart. This is the weekly. All right. Now, I mean, I think we've seen this before. This signal agrees with the weekly price structure. This weekly price structure is bearish, and this is a short signal that recently went off over the recent few weeks. Okay. But again, I wouldn't make a big deal out of that part. What I want to point out with the bond market is nothing is going on here, right? All these drama people are like, hey, bond market, ah. There's nothing going on here. It's just right in the middle of the range. There's nothing here. So we should be concerned when bond prices break the range low. That's when we should be concerned because that means rates are making new highs, and new highs are bad, especially for banks. So it's bad for everything. Bad for borrowing money, bad for everything. Right now, bonds are just kind of frozen here. They're not really going anywhere. So nothing to see here, right? We want to be concerned when it breaks those lows, which, by the way, probability favors because, I mean, look at this price structure. So the only way that maybe the Fed could step in front of it and the Fed can turn it around, because if anyone can do it, that's who it would be. Maybe they come out and they'd have to raise rates, like, and they're talking about cutting rates. Cutting rates means weaker dollar, right? So, well, cutting rates should actually reduce the edge. So actually cutting rates should reduce the yield and these prices should go higher. So yeah, the Fed can step in front of it, right? Maybe because the June meeting, they talked a lot about this June meeting. They're expected to cut by 25 basis points. But maybe they come out and they say, okay, we're going to do a 50-point basis cut this one time, blah, blah, blah. You're going to see something like this, right? If they say something like that, something unexpected, right? But that's inflationary. So if they reduce, that will reduce the short-term yields or whatever, which is good for the short term, but bad for people who hold dollars. All right. So anyway, I don't know. We have to see how that plays out. But if anyone's going to interfere with this, that's who it's going to be. But right now, it's not doing anything. So if you see a lot of drama around this, pay little attention to it, or don't overreact. Next, let's take a look at All right. So silver. I had a question about silver. XA. Oh yeah, hold on. The only reason why I point this out, the bond market, the reason why I point this out is because this is what I believe is one of the contributors to altcoin season. Everyone likes to get all excited about altcoin season and whatever, but if money is not cheap, where's the money going to come from? Retail is poor right now, man. And I can tell you firsthand because that's who I deal with, retail, and no one has any money. No one signs up for the Trade Scanner Pro. Everyone is poor. Okay. I mean, it just seems like everyone's just borrowing money. And so where's this money going to come from? Institutions are going to pour into altcoins? I don't think so. They're tied up with Bitcoin. They want the big names. They want the safe names. I don't think they're going to be tying up all their money in altcoins, especially like meme coins and all other garbage. So where's the money going to come from? Usually it comes from cheap money, right? Cheap money. Now people have more money to spend and it goes into altcoins. That is usually a typical catalyst of altcoin season. So if we have an altcoin season, it's not coming from the bond market. And that's usually a big source. So, okay. So let's jump over here. Let's take a look at silver. A wanted to see silver. XAG, USD, silver. Ooh, let's see what's happening with silver. How much is silver these days? 35. Okay. So let's go back here a bit. This is the weekly. Let's go to the daily time frame on silver. Oh, we have a signal on here. All right. So let's see if this signal makes sense. And let's also see if there were any re-entry opportunities and how long this signal has been present. Wow, that's a nice move on silver in one day. $1.07, that's a big move for one day. All right. So the general structure on silver, well, silver and gold and silver should be following each other theoretically, right? Silver has been very slow to follow. Gold, of course, has made some ridiculous highs, and silver theoretically should be a lot higher. based on that relationship. But it looks like silver likes to spend a lot of time consolidating, just looking back here, right? So silver is still, it's in a bullish consolidation in general. We can argue that this is a bullish higher low or a bullish range, right? It's a consolidating, it's a higher low consolidation. That's the phrase I was looking for. And that's your low right there. Great place to buy if you don't have silver. What price is that? 20. All right, so you could round that to $30. Okay, you can round that to $30. Good place to buy silver. Right now we're at $34, almost $35. Now, so with that being said, a signal was called in the middle of this range. Wow, after silver got hammered over here, oops, got this signal was called over here. So my first point is we should be looking for longs in silver, right? So the Trade Scanner Pro calling a long makes sense. We should be looking for longs. Secondly, the long was called back here, which was on Wednesday on the 14th. Okay, that's when silver was called long. Today is June, right? We're in the second day of June. So this trade has been in play for half the month there. Since that long was called, I mean, look at this. Were there any re-entry signals? Take a look at this. I'm going to make this nice and big because this is what I was talking about earlier. If you watch my stream earlier, I talk about using the Trade Scanner Pro. What I was doing was, I can explain it here real quickly, was instead of taking the initial signal, just jumping in on the initial signal, which would be like right here, instead of doing that, I said, okay, I'm not going to do that. I'm going to look for re-entries only. I'm not going to take the initial signal. So that means retesting the blue line. I'm not going to touch anything unless it retests the blue line. That actually saved me. I was able to avoid an entire stop out because of that, right? So look at this. The blue line here is at what price? 32.67. Look how many times it got close to that. So in a situation like this, now there's no, so like on a daily time frame, what are you going to do? You're going to wait till the candle closes and then you're going to buy it. You're going to get a bad price, right? So in a situation like this, you know your entry price. You can go to a smaller time frame, like on a 1 hour. What does the 1 hour look like in this situation? What does 32.67 look like on the 1 hour? Let's just put it on the chart here. 32.67 is right here. Okay, so on the 1 hour time frame, I mean, there are no specific signals here. You'd have to go to a smaller time frame, probably a 30-minute time frame. Let's see, anything here? Wow, some bearish signals. Interestingly enough, why do we have bearish signals here? I guess this thing was showing bearish momentum and it was giving bearish signals. Now, I for day trades, okay, but that's not where you'd be looking for longs anyway, right? You'd be looking for longs near the support. And this is one of those situations where if you're near a support and your trend is bearish, but you know it's a bigger picture support, that's when you'd switch to counter trend mode. So if we go to counter trend mode, I bet you there's longs. Let's see. Any? Yeah. Right? Look, long. Okay. Long. I don't know if this one got anywhere. Let's see. Is this thing profitable? Yeah, the thing says a profit of 22 cents. Okay. Long over here. Right? Profit, what, 36 cents? So, and then it calls a short over here. Well, now it's calling shorts because it's counter trend mode. That's why it's calling shorts. I would not want to be looking for shorts right now, okay, in counter trend mode. So now that the trend is back in line, you would just go back to trend mode and look for longs. But the point is, in this situation, right, I went to smaller time frames to align with the daily time frame. That's how you use this thing. So I go back to the daily time frame, right? And again, we were talking about we were trying to align with the long signal on the daily time frame, and there were all these potential re-entry possibilities. There were a number of them on silver. That's how you use that's the re-entry technique. Now, again, you're going to find that more often on these larger time frames because a lot of times you're going to come across a trade and the trade may have been in play for days and there may be opportunities to re-enter. More ideal would be if price retested inside of here, which I like to call this the risk gap, right? The risk gap is nothing more than your entry price relative to the stop loss, right? That's a gap and it's a risk. That's your risk. So a lot of times if price retests that area and then you get like green candles, that could be a reentry as well. Or you could use a Trade Scanner Pro on a smaller time frame and look for longs around those levels, most likely in counter trend mode if you're bullish. Does that all make sense? I know I'm covering a lot of stuff. It could be confusing, but if you're long silver, I mean, so here's a few things we could take away. You don't want to buy it now. This would definitely be a bad place to buy silver. Would you guys agree? If you're long, beautiful, and you're near profit objective. So you should be preparing to get out of some. And your trailing stop is now active, and maybe this turns into a trade that goes to 50. Who knows? I don't know. But that is some candle right there, right? That's a pretty significant candle, but I wouldn't buy it now. You know, you're going to have these breakout traders and you're going to have the YouTubers saying that silver is going to go to 100 and blah, 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 blah. But all I can tell you is risk is elevated, right? Because look where you are. So, not a good place for new longs. Definitely not a good place for new longs. Great place to take some profits off the table and wait for pullbacks. Make sense? I was in around 33.40, but watching for resistance. Okay. Yeah. So what do you have? What do you have? Like, do you have physical silver or do you have futures? Like, what do you have? Physical silver is a great way to go. You know, buy coins and stuff like that. It's the only problem is you got to deal with the dealers, and they sometimes, you know, their spread is sometimes ridiculous. But oh, you have perps. Oh, nice, nice. Okay, okay, that's a nice way to do it. So yeah, just watch. Look, use a Trade Scanner Pro. You have a profit objective over here, and right now this candle is showing no signs. It's not like you have a pin bar on top of that candle. So I would be anticipating the next candle should at least do something like that. That's what it should do if the momentum is going to stay intact. And if there's going to be any problem, then maybe you'll see the problem up here somewhere. So at this moment, I would try to give it a chance and see if you can get some more out of it before you start taking something off the table. So that's silver. So thanks for asking about silver. Let's move along here. Let's see what else. I saw some other things in there. Let me just go back. I'm running out of time though. Let's see, what time is it? Yeah. So I'm going to wrap this up. I may not be able to answer all the questions. Let me just see what I have here. Yeah. Guillermo with the total. Okay. What is that? I don't know the symbol for that one. Because I know total 3 is like excludes like Ethereum and Bitcoin or something like that. But I don't know the one that excludes the top 10. I don't know what is that. I don't know the symbol for that. How much buying pressure do you think rate cuts will introduce into alts? They just feel so heavy. Well, I understand. Um, yeah, I understand what you're saying about that. I really don't know the answer. A's question over here, right? His question is this. You know, how much buying pressure do you think the rate cuts? I don't. I mean, if it's only a 25 basis point rate cut, I don't think much. We need a serious rate cut. Like we need to see really the yields come off like significantly for us to have enough money, right? But there's a big problem with that, right? And that problem is inflation, and we have inflation to begin with. I mean, I still see prices at the supermarket going up. I still see prices for things. I'm like, you're joking, right? I still see it. So, uh, inflation is still there. I don't know how the Fed can cut aggressively. I don't know. Again, I'm not an economist. I'm not one of these renowned economists who pretend to know everything. I'm not one of those. So I don't know. Um, that's a good question. But I believe in order for the yields to become a catalyst, they're going to have to be low. Like, remember, when we go back to 2020 and the Fed basically went to like zero with their interest rates. Remember that? And then on top of that, they mailed checks to everyone. That was a pretty good catalyst for altcoins, wasn't it? So just something to keep in mind. Like, we need something significant like that. Now, keep in mind also that that's not the only catalyst, because when we had the previous altcoin season, um, not the election one, I think there was one before that. Interest rates had played like no role in it at all. No one cared. It's just altcoins just rallied anyway. So another catalyst could come along that can drive the alts as well. So just keep that in mind. All right. Let me see here. Okay. Yeah. Now I know total. Okay. Because I know there's a couple of those total. I know there's a couple of those. There's like total three. Uh, total. I guess it must be this one. It must be the top one there, right? Let's see. Must be this one. Total market cap. Is it this one? Is this the correct one? I mean, it looks very similar to Bitcoin, doesn't it? The charts almost look identical. Total three excludes the top. Total three excludes like Bitcoin and Ethereum or something like that, right? And then total is something else. No, that's all. Okay, this is all, right? So total three. Maybe you're talking about total three. I don't know if there's one that excludes the top 10. Let's see. Total three. Is it total three? Yeah, see, look, excludes Bitcoin, Ethereum, and stable coins. Okay, so I guess like Tether and all that. You know, I don't understand these stable coins. Tether seems to be the dominant, right? And then you have Coinbase, whatever, Circle, whatever that one is, USDC. I don't understand why people are coming out with other stable coins. What do you need them for? We need more dollar pegs? I don't understand that. I just don't. Maybe if you cheaper transactions in Tether because Tether sucks. I don't know. Anyway, but I hear that there's going to be a lot more action with the stable coins as far as, I guess, business opportunity, not trader opportunity. So here's maybe others. Okay. So this is, I never heard of that one. Maybe that's the one. Let's take a look. Uh, you're right. You're right. Look at that. Learn something new. Others. So top 10. Look at that. Interesting. Looks exactly the same. There you go, Guillermo. Thanks, A. See? Thanks for the community. I just learned something new today. I had no idea there was one called Others. By the way, people, if you're watching me on Twitter, I'm just going to say this for the Twitter people. Do me a favor and retweet my stream if you can. Helps me out. I'm not going to bother begging anymore because no one retweets them anyway, and I got to do other things. Like I rant. I had my rant this morning, earlier today. I had my rant about all that. But anyway, all right. So here's Others. It looks just like Bitcoin, doesn't it? Look, even with the failed low, everything. Look, just Bitcoin is a little more granular, I guess. I mean, this one's a little more dramatic. This is the daily time frame, right? This is big. This is both. These are both the daily time frames. So, I mean, these charts, a chart like others, these charts can kind of give you maybe some perspective that Bitcoin may not be able to give you. Maybe you could use it like that. Like for example, Bitcoin, as you can see, Bitcoin is trying to give us like a little bounce sort of thing, right? It tried to, and it gave us that little bear flag situation, right? That little mini bear flag situation. That's what Bitcoin gives us. Others is much more pronounced. Look at this, much more pronounced. Like if I saw this, this is clearly, this is bearish. That's bearish. Okay, that's a bearish formation right there. That's not exactly a bear flag, but you have the lower high, and then you have this common trend line, right? You have this trend line over here. It breaks that, looks like this. So this is bearish. And so relatively speaking, if this is a representation of the alts to Bitcoin, it doesn't look good, right? This is much weaker than Bitcoin. So if Bitcoin pulls back a little bit more, where's this thing going to go? Right? And look at this too. It has a very similar this bear flag situation. I mean, it looks almost exact. This little mini bear flag situation. But this thing pushed the low, right? That's the low. This thing pushed it. Bitcoin, I mean, I guess would this be the equivalent low? I guess you could say. What date is this? Let's see. That's the 22nd. When is this? No, this is earlier. That was the 18th. But I guess it's kind of close. I guess it's close. I don't know. I don't really know what you can really get from this. Maybe the just the other just gives you signals a little sooner. Maybe I don't know. The sentiment is pretty bearish, which makes me think that there's still some room to go up. Well, Bitcoin really sentiment's bearish. Not if you went to the Bitcoin conference. um, I had no idea that the sentiment was bearish. Structurally here, if this thing can find a bottom somewhere above 100K, 113 is at least a possibility. And if 113 breaks, then I believe 120 is also a possibility. That could be a nice wave 5 extension if we get that extension, because this is probably not the broader corrective wave. It's too small, and it's too like a broader corrective wave, we would probably see a massive sell-off first. The initial wave the initial leg probably has to be very big, and this isn't that big. So I don't know. So I agree with you, Alex. I mean, if this thing can find a bottom, now anything is possible, but if this thing could put in a bottom above 100K, 113 is a likely test. And if that breaks, 120 becomes a likely test. Okay, I don't know, but 130. I mean, I guess 130. Hey, anything's possible. But yeah, I still believe that because we haven't broken any major supports yet. When we break a major support, then that's when I'll start adjusting at that point. But until then, I still lean on the bullish side. It's just, when it comes to 1 minute charts and stuff, I switch back and forth all the time. But bigger picture, I would lean on the bullish side and I would be looking for a buying opportunity, at least for swing trades. Investing, no. I don't like these levels at all for investing. So, um, okay, saying zoom out. Well, I can go to a weekly. Let's take a look at the weekly real quick. And what he's saying here, zoom out to monthly across the years. I think it's supposed to be for checking alt season trends. Oh, all right. Well, I mean, but Bitcoin will probably look very similar, right? So look, this is a weekly chart. If I zoom out a bit, I mean, look, and if I do the same thing for Bitcoin, I mean, it's probably going to look very similar. Let's see. Let's see. When was this? This is November of 21. When was this? November of 21, right? So this peak over here is basically like the equivalent of this. They're like around the same time. So they're similar, right? So obviously, if the altcoins are rallying, Bitcoin is rallying. But interestingly enough, now look at Bitcoin on the bigger picture, right? Look at all the progress Bitcoin has made, and look at the lack of progress that the alts have made. That's not a good sign. That's certainly, I don't know. That doesn't look like a recipe for altcoin season to me. I don't know. So anyway, interesting observation. All right, you guys. So I've been talking too long now. All right, if I missed your question, I apologize. I try to get to them. Um, all right, let me just go back here. I don't know if I like this news from my shorts. Well, again, what we're talking about here, as far as like the bigger picture for Bitcoin right now, I mean, Bitcoin has that corrective structure in play. If you're short, you're simply watching for things to invalidate your short, like like a double bottom or failed low or something like that. That may be a problem, right? But you don't have that yet. You don't have that yet, and Bitcoin has some room to pull back a bit, right? So at this moment, I would still be okay if you have a swing trade short. It's aggressive, but at this moment, try to let the market deliver what it can. When you see some conflicting patterns, just look for the buy signal. That may be a time to start making adjustments. Maybe if you have a profit, take something off the table or something. At that point. Oh, the tariff. Okay, I meant the tariff extension. Oh, okay, the tariff extension. I'm not sure what you mean by that, but all right. Anyway, you guys, um, Yeah, so I hope I answered your questions. If I missed one of your questions, I apologize because I have to wrap this up now. But come back, next Monday, and I'll answer it then. Otherwise, check me out. I'm 9:30 a.m. Eastern time. I do my day trade stream, so we'll see how it goes on Wednesday. Right, it's Monday, Wednesday, Friday. And by the way, just as a reminder, this Friday I will not be streaming because I have to go to a conference in the city. So I'll remind you guys again on Wednesday. No, we'll just go back visual, go back and watch the stream because I have to sign off now. I explained it the earlier part of the stream. I talk about the corrective structure. I spend a lot of time on Bitcoin explaining all that stuff. All right, so just go back and watch it there. All right, again, everyone, thank you so much for taking the time to watch me, and thank you for your support and everything else. And I'll see you on the next one. All right, so enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.